Shares of department store Kohl's surged 37% in wild trading. Imagine a scenario where a company's stock skyrockets without any clear reason. This is exactly what happened with Kohl's. On November 25, 2024, a typical Kohl's store in Pleasant Hill, California, looked much like any other, but behind the scenes, the financial world was abuzz with the unexpected surge in Kohl's stock prices. According to Bloomberg, shares of Kohl's, KSS, experienced a dramatic 37% jump in a single trading session, marking a wild ride that mirrored the meme stock phenomena of recent years. The stock, which closed at $10.42 per share on Monday, more than doubled in value early Tuesday before the gains began to evaporate. Trading was even temporarily halted due to the extreme volatility. By late morning, the trading volume had surged to nearly 17 times the 30-day average, indicating a significant influx of investor interest. Despite the frenzy, there were no apparent corporate announcements or analyst ratings that could explain the sudden spike in share prices. Instead, Kohl's has all the hallmarks of a classic meme stock, a familiar brand that many retail investors remember from their youth, and a stock that is heavily shorted, with about 50% of its shares sold short, according to FactSet. Neil Saunders, managing director of Global Data, observed, "There's a lot of irrational exuberance around the stock. It's very reminiscent of what we saw with Bed Bath & Beyond a few years ago. There's no fundamental reason for this level of increase. The business itself remains quite weak." This sentiment highlights the speculative nature of the rally, driven more by investor enthusiasm than by solid financial performance. The Wall Street Bets forum on Reddit, which gained fame during the GameStop short squeeze in 2021, has recently seen discussions about Kohl's as a potential target for a short squeeze. The combination of high short interest and strong brand recognition among retail investors makes Kohl's an attractive candidate for such a move. When a large number of investors buy into a heavily shorted stock, those who have bet against it may rush to cover their positions, driving the price even higher. However, beyond the stock price, Kohl's has been grappling with significant business challenges for years. Sales have been declining, competition is intensifying, and the company is currently led by an interim CEO following the ousting of Ashley Buchanan over a conflict of interest scandal. In May, Kohl's projected a 5% to 7% decline in sales for fiscal 2025, with comparable sales expected to drop by 4% to 6%. But here's where it gets controversial. While the stock's sudden rise might seem like a golden opportunity for some investors, it also raises questions about the sustainability of such gains. Is this just another fleeting moment of hype, or could it signal a genuine turnaround for the beleaguered retailer? What do you think? Should investors jump on the Kohl's bandwagon, or is it wiser to wait and see how the dust settles? Jim Cramer warns Kohl's short sellers, cover and move on. Jim Cramer warns short sellers to cover and move on, as Kohl's stock faces a potential short squeeze. CNBC's Jim Cramer, https://www.cnbc.com/jim-cramer-bio, on Tuesday urged investors to avoid shorting Kohl's, https://www.cnbc.com/quotes/KSS, stock, drawing a parallel to the GameStop, https://www.cnbc.com/quotes/GME, short squeeze 4 years ago. The shorts have clearly overstepped their boundaries with Kohl's. They've run into a buzzsaw of their own creation, he said. Even now, I think they'd be wise to cover their short and move on before they have another GameStop on their hands. Kohl's shares saw a volatile session, https://www.cnbc.com/2025/07/22/Kohl's-shares-rise-interest-reddit-post.html, Tuesday, with trading temporarily halted in the morning. The stock ultimately finished the day up 37.62%. FactSet reports that about 50% of Kohl's shares are currently sold short. Short selling involves borrowing shares at a lower price, selling them, and buying them back later at a lower cost to profit from the price drop. Cramer emphasized that investors aren't buying Kohl's for tangible reasons like its cosmetics partnership with Sephora or Amazon. https://www.cnbc.com/quotes/amzn. Instead, the stock is being bought due to its extreme short position. Whenever there's a large short position, many buyers often collaborate online to orchestrate a short squeeze, as Cramer noted. He likened Kohl's to GameStop, stating the department store chain was discussed in the Wall Street Bets forum on Reddit, https://www.cnbc.com/quotes/rddt. The forum gained massive popularity in 2021 after helping facilitate GameStop's massive short squeeze. https://www.cnbc.com//GameStop short sellers are still not surrendering despite nearly billion in losses this year, or HTML, which shocked Wall Street and cost short sellers nearly $20 billion. https://www.cnbc.com//GameStop short sellers are still not surrendering despite nearly billion in losses this year, or HTML #text equals people %what %past %GameStop %in %new %20 yok %20 CT and EMP text equals the %20 astronomical %20 rally %20 in %20 GameStop, but they're not budging. Kohl's was a textbook example of a stock that had become perfect for the GameStop playbook, Cramer said. Cramer highlighted that Kohl's balance sheet isn't bad enough to justify such a heavy short position. He suggested the company may not be great, but it isn't terrible either. According to him, short sellers should have covered their positions, returned their borrowed shares, back in the spring when the stock fell as Wall Street panicked over President Donald Trump. https://www.cnbc.com/donald-trump new tariffs. In the end, the short sellers have the wrong target, a company with declining sales and a lot of debt, but not one that's about to fall apart, which is what you need if you were still shorting Kohl's down here in the single digits, Cramer said. Hedge funds, take my advice, cover and move on. Kohl's did not immediately respond to a request for comment. Sign up now, https://www.cnbc.com/join-club, for the CNBC Investing Club to follow Jim Cramer's every move in the market. Disclaimer: https://www.cnbc.com/mad-money-disclaimer. The CNBC Investing Club Charitable Trust owns shares of Amazon. Questions for Cramer? Call Cramer, 1-800-743-CNBC. Want to take a deep dive into Cramer's world? Hit him up. Mad Money Twitter, https://twitter.com/madmonioncnbc. Jim Cramer Twitter, https://twitter.com/Jim Cramer. Facebook, https://www.facebook.com/madmoney?ref =IMT_homepage_panel. Instagram, http://instagram.com/Jim Cramer. Questions, comments, suggestions for the Mad Money website? madcat@cnbc.com